Hey, folks, welcome to Verified Investing. My name is Gareth Soloway, Chief Market Strategist here. Today, as everyone wants to know, we're going to go over Bitcoin. I want to go over the chart, what the projections are. Has anything changed from my previous analysis? We're also going to take a look at a couple opportunities out there that I do see in the commodities market as well as the stock market. All right. So first, let's get right to the nitty gritty. For those of you that are interested, let's take a look at the Bitcoin chart. Now, this is interesting, folks, because we started to see Bitcoin floating back up just a little bit. So again, if you look back at the analysis, everything so far has been spot on. We had the breakdown through the neckline of the head and shoulders. It took us to the target of 30,000. We then chopped around, ultimately trading back up. Remember, I talked about once you got down to the target of the head and shoulders, which again was 30,000, you really would likely go back up to the neckline. And that's called the scene of the crime. And this is the neckline right here. And then look at how the Bitcoin chart got right back to that level. And again, what's amazing here as well is that if you actually connect this pivot here to this low, which gives you that neckline, it actually gives you almost to the penny the high on Bitcoin before the big dump about a week ago. And remember that big dump was pretty precipitous and not unexpected, right? I came out on Twitter. I talked about it in many interviews about that had been achieved. The target of upside had been achieved. Now begins the next leg to the downside. So we saw that big dump that took us all the way down into the low 40,000 range. We've then seen the market kind of chop around and begin to float higher. A lot of people are wondering, okay, is this normal? All right, the answer is yes. Why is it normal? Well, anytime you're floating up, right, and you see this much bullish sentiment out there, bullish sentiment just doesn't evaporate overnight, all right? One down move in Bitcoin, especially when it only retraces a portion of the up move, is not going to create a major bearish sentiment shift, all right? So think about it like this. If you have 100 bulls on Bitcoin and 0 bears, when you start to sell off, some of those bulls will turn into bears, but there will be other ones that stay bullish. And that creates this kind of sentiment where it will start to be bought up again. You'll see a little bit of a float higher. My expectation in the short run is a move back to about the 50,000 marker. So you can see this little pivot high right here. I believe we go back to about 50,000, give or take, and then you'll start to see the next leg lower. The next leg lower has an easy target to find here, folks. It's right around 40,000 to 41,000. Pivot high, and pivot high. You can see how you kept on hitting this level and then pulling back, hitting, pulling back, then finally breaking out to the upside. So what that means is it was resistance. So when you were underneath it, it was technical resistance. It now becomes support on the way down. So again, next sell-off takes you to 40 to 41,000. You probably get another kind of buy the dip mentality buy from bulls, which will bounce it again there. Then it'll head back below 40 where it starts to trade between 30,000 and 40,000. And that's back to this range. Now that range trading from 30 to 40 could last weeks to months. All right. And I want to be clear on this. A lot of people are like, once it hit my target of 52.5, 53,000 on the upside of Bitcoin, they all, there's a lot of individuals out there that said, okay, well, now Gareth says it's going to crash. It's not going to crash. Again, markets don't crash when they're near highs. If you look at previous cycles in Bitcoin, whether it's 2013 into 2014, where it topped out, or in 2017 into 2018, Bitcoin didn't just collapse, bounce, and then collapse again. There's a lot of chop that's created because there's a wave of bullishness that says, okay, Bitcoin is declined here or has fallen. Now is our buying opportunity. Crashes occur at the lows. That's the final flush out. So I expect that once you get below 30,000, the move to 18 to 20 will be your fast move. That'll be more of your very quick panic, oh my goodness, the world is ending for Bitcoin type move, where we actually, as buyers, that's where I will be looking to heavily accumulate. All right. So just let's be clear on that again, likely in the short term, a gentle float up back to 50, give or take a little bit. Then another wave of selling takes you to 40 to 41. Another kind of float comes in. Then finally you get back into the 30 to 40 range, which will likely last for a while, eventually breaking below 30, where you get your faster sell-off, where people really throw in the towel. And that's when you get back to those lower levels. All right. So again, I can't stress this enough, guys. It's not necessarily just like the stock market. All right. You're at all-time highs. You have this mentality of buy the dip. So yes, eventually the stock market's going to correct 10 or 20 or 30%, but you're not going to get it very quickly off of the highs. Initially, you'll get a 3 to 5% correction, then it'll bounce 2 to 4%. Then you'll get another 6 to 10% correction. It'll bounce another 5%. That's the way tops are created because you have this ingrained mentality of buy the dip. It's when you get down to the lows, like if you look at 2008, 2009, right? The financial crisis, the hardest selling took place in early 2009, and the market bottomed in March of 2009. So it was January to March where the market was in full panic mode. It went down every day. It was just Armageddon. That was the bottoming period. So that's actually when you start as a psychological investor and trader, start looking to be an accumulator. Once you see that, if you go back to Bitcoin, in 2020, 2019, really, there were signals out there on the psychological side that gave you buying opportunities. For instance, you had a point where Bitcoin got below 10,000 to 7 to 6,000 to 5,000. And it used to be prior that CNBC always had that ticker at the bottom of their website of what what Bitcoin was doing. They actually removed it. All right. It got so bearish that they actually removed the ticker of Bitcoin. All right. You had so much bearish sentiment. People were talking about, can Bitcoin even survive when it was below 10,000 in the 76543 level? All right. That's what you're looking for. You want the doubt. The doubt creates opportunity. Smart money who has that conviction will be looking to accumulate there. All right, so that's where we stand on that chart. Let's quickly go into the S&P 500 via the SPY here and take a look. We are seeing a little bit of a bounce today, but again, this chart is just one of the most amazing charts out there, in my opinion. If you know charting or if you're interested, I just have to show this to you because it speaks to how you can tell the rally was getting weaker and weaker. Now, you are rallying today, decent little bounce, but again, just basically getting back what it lost yesterday on the SPY. But notice the low going back to March 2020. All right. Notice the distance here, how far it was, and the height. All right. That was the strongest point of the rally, right? Strongest point. Longest distance between this touch and this kiss right here, and the highest height portion. Okay. Then after you kissed the line, now you didn't even hit it here. So that's how strong the market was. It rallied again, but look at the height. It's now less than it was over here. And the distance, measure from here to the touch right here, it's less, right? So that tells you that the rally was still strong, but it was weaker than this initial surge. Then you had this bounce here, and then you come here, and here you hit once, here you hit once, twice, and the distance and height again less. Distance, height less. Here you pierce. So notice every time you miss the line, you touch the line, you hit it twice, basically, you pierce it by a bigger margin. You can see before your eyes that the power of the rally is getting weaker and weaker. And to the point where once you pierced here by a bigger margin than even over here, which was one step further, you then basically get just on the line, break down, you finally confirm with two lower closes, and then you can't even get above. Now the market's rolling over. So you are watching before your eyes a market that is topping. All right. It is absolutely topping in the near term. Now, remember, markets do not crash down. So you've had smaller down days here that have added up to a decent sell-off. Now you'll get a bounce. That's the way it works. Just remember what I talked about on Bitcoin. You get the sell-off initially, then buy the dippers come in. What I'm looking for here on the SPY is whether or not we go up and take out this high. If you go up here, right to here, and you don't take out the high, and then you curl over and make a lower low, you now have a change in trend officially. What do I mean by that? Well, at this point, you would have a lower high if it doesn't take out this high. And if it takes out this low here, now you have a lower low. And then you start watching this low. And then you start watching this low. All right. But once you have lower highs and lower lows, that changes the whole dynamic of this chart because these are all higher highs and higher lows. And that's a big change. You get that flip over. So basically step one for me of this market topping was the confirmation here. We then rallied, but couldn't get above this line. We've now curled over again. Step two is a change from higher lows, which we still have low, higher low. And so far, high, higher, high, higher, high. I want to see that change over to lower lows and lower highs. That will be the next nail in this coffin for this market with potential for quite a bit more downside, 10% or more potentially. All right. So that's just a little update there on the S&P 500. I just want to briefly go over a couple stocks and one commodity that I'm watching here. So one commodity that I've been shorting yesterday and today is natural gas. Natural gas extremely extended. I love this pattern today, folks. You saw a big flush at one point, now a bounce. That's usually the beginning of the end for a commodity. I do think that UNG, which is the ETF, is a good short here. I am short. I think we're basically flat on the trade, give or take a little bit here, but right up here, I am short via buying KOLD, which is a 2x ETF. It is very volatile, but it can be done. Or you could just short the UNG, or you could buy puts on the UNG. There's lots of different ways to trade it, but natural gas has a lot of signals that it's running out of, energy here, to use a little analogy or something that fits natural gas there. And again, I do think it has some downside. The other stock I'm watching is Wynn Resorts. Wynn Resorts hammered on the back of China potentially cracking down on companies in Macau. This does potentially have a bottoming tail today. I'm watching to see where it closes. I do think that this is an overreaction the last couple of days. The stock just last week was trading near 110. Today, it hit a low of 82. This to me is an opportunity, especially if you get a bottoming tail, then you get a bottoming signal of accumulation, good volume there as well. Anytime you rally off the lows and create this tail, it usually speaks to institutional buyers or smart money buying, especially when the volume is there. So I do think that, again, you could see some near-term chop on this, but Wynn likely has a bounce back to, 92, 93, maybe as high as 100 in the coming week or weeks here on the chart. So again, these are what I'm looking at here. Some really interesting charts out there, good opportunities for us as investors and swing traders. I hope you got a little bit out of this video. Come find me at inthemoneystocks.com, verified investing alerts. I look forward to seeing you there. Have a great rest of your day. Take care.